Hi everyone, I'm Tony with Clarkson Santoro, and this is our weekly real estate update for September 9th. In this weekly series, we update you on the latest trends that are occurring in our real estate market here in San Ramon. Using our more than 50 combined years of experience helping clients buy and sell homes, we explain what those trends mean for you as a homeowner or as someone who is looking for a house you will love to call home. The current inventory is 57 homes, down from 62 last week. The average asking price of those homes was $1,983,000, which is up from last week's average of $1,962,000. 7 homes asking an average of $1,701,000 went pending last week. That is less pending homes than last week's number of 16, with a lower average asking price from last week's $2,056,000. A total of 10 homes sold this week with an average sales price of $1,974,000. That average price was up from last week's price of $1,953,000, and the total number of sold homes was lower than last week's 12. Okay, so now that we know how our market performed this past week, let's look at the key metrics we track that help us understand where the San Ramon real estate market might be heading. The first is inventory. The inventory level has dropped again for the 6th week in a row. We are now well within a very normal inventory level for San Ramon. Since inventory is in the high 50s, we still consider this leaning slightly in a buyer's favor, but not by much. This indicator score came up to 43 last week, and we will raise the number again to 47 as we move into a normal inventory levels. Directly related to inventory levels, the next metric we watch is the market turnover. The turnover rate is still above 1.0, but it did come down slightly this week. That is most likely due to the holiday weekend and extremely hot temperatures discouraging people from going out and looking at homes. Inventory did come down some, but the total number of new pending sales is lower than we have seen in the recent weeks. Last week we raised this score to 55, and we are leaving it unchanged this week. The over-under asking price is the next indicator we track. That price continued its downward trend this week, but that is still keeping in line with the 30-day lag on this stat. I think we are likely to see another week of that number dropping before we see the sales price coming close to 100% of the asking price in the coming weeks. Last week we gave this indicator a score of 46, and this week we are lowering it slightly by 1 point to 45. The last statistic that we watch is the average sales price. Just like the over-under stat, this line continued its downward trend as well this week. But again, with the 30-day delay on these numbers because of standard escrow times, we expect this number to have another couple of weeks of decline. But based on the past 2 weeks of sales, this average sales number will probably start ticking back up soon. Last week we gave this indicator a score of 61, and this week we lowered it by a few points to 59. The first of the two metrics that we pay attention to that help us predict where the market is heading is the strength of the Silicon Valley tech industry. Our San Ramon market tends to track very closely with the tech industry, and that corner of the market took a hit last week. After last week's drop and general inflation concerns with the Federal Reserve, we were not hopeful about this market indicator. Fortunately, we did see a slight improvement in the market as the QQQ now is just over $300 a share. When the tech funds do well, buyers are more confident in pursuing a home purchase. This week, we slightly increased the score for this indicator from last week's 40 up to 41. The last indicator that helps us predict the housing market's future is the interest rates. The national average jumped up to over 5.5% last week after the Federal Reserve made some disheartening remarks about inflation. And that trend continued this week, as rates are now sitting at 5.89%, which is now the highest interest rates that we have seen since 2008. This is the biggest thing that is continuing to hold our market back from being in full recovery. Last week we lowered the score to 40, and we are lowering it again this week to 35. Overall, the market continued its trend towards a very neutral market, with some of the stats dipping their toes in that seller's market range again. I think it's safe to say that the market still favors the buyer just slightly, but there is really not much advantage on either the buyer or the seller side of this market now. For sellers, with the increase in interest rates and the stock market still being pretty questionable, the importance of making your home extra appealing cannot be overstated. If you don't have that one thing that really impresses buyers, whether that's price or an extravagant backyard, you will be struggling to find the buyer that will be willing to pay what you want for your house. But if you do have that one or two of those really special attention getters, you will find that buyers are ready to offer you good money for your home. As for buyers, the interest rate increase did not help your situation. And with inventory coming back down, it might be a mix of not a lot of options, but expensive money. The good news is that you can still find good deals, as there are a handful of homes on the market that have been available for weeks. If you're diligent, you can still find a good buy, and rates can always be refinanced later on to improve the monthly costs later. Last week, we scored the overall market at 47, and this week we're leaving it at the same level. The interest rates are the one indicator that is keeping the indicator under 50, but it is an important one to keep an eye on moving forward. I hope this weekly summary and commentary helped you understand our market better and how it is affecting you. Let me know in the comments down below, or contact us directly if you have specific questions about how you can navigate this market to sell or buy a home. And if you find this information helpful, share it with a friend. Hit the like button and subscribe so that you will always be up to date on the latest real estate news here in San Ramon. Have a safe weekend, and we'll see you next week with a new update.